think one of the reasons I'm attracted to global comedy movies is I grew up around comedy, but also I've lived in about 11 different countries, and I've always taken a sort of global perspective on things, even though I'm American. And because of my travels, I've stayed in a lot of Airbnbs, and it's taught me about how to mitigate risk. Because when I first started staying in them, every time I rented a place, the bed would kind of suck and it would hurt my back. And eventually I learned, okay, we have to mitigate this risk. We need to ask the question in advance. Is there noise outside the apartment? Do you have blackout curtains? Is the bed comfortable? So we take the same approach with iconic pictures. We ask these hard questions first to assess the risk, and we address them up front. This is to help us make sure that as many things that could go wrong, all of the things that could go wrong don't go wrong. And we do that by kind of being anal in the beginning, a little bit annoying, asking too many questions, looking at everything from every type of perspective. So anyway, I'm going to go through some of our process here for how we adjust risk in order to lower the risk level for investors and while keeping the return potential high. As I've said in these other videos, after studying film at NYU and Fordham in New York City, which is pretty much where I grew up, my first comedy screenplay was a quarterfinalist in Francis Ford Coppola's contest, and I've been featured on NBC, CBS, Comedy Central, and IFC Films. And all of these experiences have really taught me how larger companies are able to survive and sustain long-term and be profitable. Our partnerships with larger companies are one of the key ways that we are able to mitigate risk for investors. We do understand that as an early stage company, we alone cannot manage all these risks. They have to be shared. The responsibility for risk needs to be shared with other companies. So we first adjust our risk by identifying what our objectives are. To complete and sell global comedy film at highest price, on time, and in a way that creates repeat buyers. And when I say on time, 34 months, because that is what we deliver to our investors. High return, under 3 years, faster than stocks and bonds, real estate, higher than stocks and bonds, faster than typical startups. So what are some of the risks that are involved? First of all, a company might not be able to raise the full capital. Two, movie takes longer than expected to finish and sell, or doesn't finish at all. Third risk, movie or company cannot sell its product at a profit. Fourth, can we see at this level? Oh, we got to go higher. Okay. I'm going to move up here so we can still see it in camera. 4 is cannot generate high returns from backend. Okay, that's bad handwriting. Excuse me. Iconic. What we do, and I would recommend an investor have any company they invest in do, is assess the probability of the occurrence and severity of the impact for each risk. Warren Buffett says predicting rain doesn't count, building an ark does. All right, please excuse me here. Bear with me. We got just a little bit of space in between a few of these, so I'm going to try to fit the text in here. So what are our risk treatment strategies? Iconic has built its strategies in a way that seeks to share, minimize, or best case scenario, eliminate the probability of each of these risks occurring. Just as a sort of general note, all our strategies include maintaining an excellent, just a good, positive reputation in the industry with buyers, suppliers, and who am I missing here? Buyers, suppliers, and of course, investors. So first of all, cannot cast an A-list actor. Iconic's risk treatment strategy is 1, script with a recommend from the top coverage provider. This is very important for an actor. They only want to get involved in a good script. The script has to be excellent, world-class, and that needs to be validated by a professional who has their eye both on commerce and entertainment and art. Sort of the holy trinity. IP with a built-in audience. Okay? An actor wants to get involved in a movie that they know viewers are going to show up to see at the theater's opening weekend. 3, who is the producer? Who's the production company? You need to have a production company with a strong track record. 4, top casting director. Kind of unsung heroes in the industry. They've cast some of our favorite characters. These individuals have direct relationships with the actors and know them. A director with excellent credentials and a reputation. You are not going to get an A-list actor without a director who attracts them. It is sort of like the yin to the yang. An actor, in order to feel safe, needs to know they're in the hands of a great director. This is what I was worried about. No space. Okay, director. And the last thing is fully funded. All the funds for the picture are in escrow with a proof of funding letter from the bank. And to be honest, this is where the investors are the most helpful and necessary. You can learn more about our negotiations with A-list actors and our strategy in a meeting. A company cannot raise the full capital. If you are investing in a film company, I recommend you invest in a company that holds its funds in escrow and releases it only when a minimum cap is reached. This ensures that if you put in a couple $100,000 or $1 million, you know that it will not be used until a minimum amount of money has been achieved that is required in order to achieve its goal and its revenue targets. The movie takes longer to finish or doesn't finish at all. Can I read? Escrow. Okay. We're partnering with a production company with a track record of completing global comedy movies on time. Production company that has completed films from A to Z that have gone to global distribution repeatedly. Okay. The next thing is a completion bond company. If you're going to invest in a company that is producing a film, make sure that they have a completion bond. A completion bond is used to ensure for the investors that the film will be completed on time. It will be finished using all of the capital invested by the financiers. You can learn more about this also in a meeting or in our materials. A company cannot sell its movie at a profit. Obviously, this is a risk for any company in any industry. But what I would recommend when investing in a film production company is ensuring that the script, and concept get a recommend from a script coverage provider, and 2, are globally appealing. Also, partner with an executive producer or an executive production company or a financial management company that is experienced with film. Film finances can be complex. I would recommend working with a company like Iconic Pictures that has these built-in partnerships. Selling a movie to the buyer with built-in audience. Built-in audience. Having a built-in audience increases the likelihood that the film is going to sell at a profit. And I believe this is the last tactic we use is casting an A-list actor. An A-list actor, I've said this before, is sort of an insurance policy. Mitigates the risk tremendously. We also use a commercial genre, preferably a genre that is popular universally and is popular now. So I would recommend investing in a global comedy film because, as I said in one of the earlier videos, comedy's trajectory is starting to move up. So really now is an ideal time, if you're going to invest in movies, to invest in comedy movies. 10 to 12 set pieces. I've also said that before, but it's just good to keep in mind. These are the trailer moments. A distributor wants to know that they're going to be able to sell the movie on the basis of a trailer. Audiences can't see the film before they see it. They can only see a trailer. And the last is the test screening. Okay, a favorable test screening. All of these things mitigate the risk of not being able to sell at a profit tremendously. A company cannot generate high returns from the back end. This is also a risk that a company makes a movie, maybe it has a good initial sale, but then it doesn't do well and generate back end profits. There's a lot of profit potential there for investors. So we do everything that we mentioned above. And there's a strong emphasis on the test screenings and feedback, which we start actually in development using a proprietary process that I can't talk at length about right now. Also, if you're investing in a comedy, make sure that they're verifying their laughs per minute. 3 to 4 laughs per minute is huge. That's an audience basically laughing all the time. I think the record, maybe Naked Gun or something, it's up there like 2.7 laughs per minute. We want to get it to 3, 4, takes it to another level. Apolitical and wholesome. I know that there have been a lot of political movies over the past 5 years, but when we really look at them across the spectrum, a lot of them do not generate a profit because they are dividing audiences. Good for marketing and generating press, but it's not always great for generating revenue because you're alienating part of an audience based on politics. Regardless of what side of any political debate you stand on. Okay, well, you can learn more about our risk strategy with any of these points in the meeting. I recommend a high return alternative asset that has a risk management plan similar to Iconic's, especially with a company that documents its risk management plan. Iconic Pictures International does this by assigning responsibility for each risk and management task with clear directions and a detailed action plan to each relevant department. Then we monitor the risk. So we just make sure that whatever risk strategies we're using, whether it's with the financing, the A-list actors, the screenplay, etc., we make sure that whatever risk strategy we have come up with and are implementing is still practical and up to date. And then lastly, the team and the company regularly monitor the sources of risk and analyze any changes in the environment and make necessary updates to the risk management plan. Lastly, we evaluate the risk management plan kind of like when everything is done. After a film is sold, after revenue and profits have been generated, we go back, reflect, and see, how was the risk management plan? How much did it lower the risk? How much did it help increase revenue? We suggest requesting a meeting to learn more and receiving an investment presentation package. Because it is potentially a long-term professional relationship, we recommend at least a few Zoom meetings and doing due diligence. And if it is a win-win situation, then moving forward. Thank you.